going to talk about is what everyone's waiting for. And we're bringing Brian in specifically to talk about alternative ways to get finance in this crazy market, because 6.5 mortgage, 30-year fixed is tough to get. So we did some research and we're coming up with 4 alternatives. So the first one is, you got to think outside the box when things get tough. Assumable mortgages, and I'm talking about, first of all, what is an assumable mortgage and what mortgages can be assumed?
Okay. An assumable mortgage means whoever holds the loan, so let's say you own a home right now, if you did a loan through like a government-backed loan, a great example would be a VA home loan or an FHA home loan, are both backed by the federal government. One's backed by the Veterans Administration, the other one's the Federal Housing Administration. Those loans are assumable. It means a buyer can come along and qualify with the lender, the servicer that maintains the loan now. So there's your key, is you don't call
necessarily Ryan.
You can't call me.
Right.
You can call me and I can talk to you about how to go about it. But really you have to contact the current owner's loan servicer. Yep. It's not the original.
It's whoever it is.
Yeah, and it could transfer while you're trying to buy the house. It could be transferred. So they are going through. They take a solid 90 days. This should be the expectation. And you have to qualify for taking over the existing loan balance.
Yeah, so, and this is important. The 2 things I want to point out, especially if you're a VA or an FHA person, or particularly VA, is if you bought the house, because some of these people bought this at a good rate, right? They bought the house at $300 and now it's worth $500, but their balance is worth $275. Mm-hmm. So what happens then?
You can take over the $275 balance.
Right, but you have to buy down to the $275. You buy at $5, you got to bring in the difference, correct?
Yeah, you're putting a down payment to, if you're agreeing at say a $500,000 purchase price, then you're going to put $225,000 down, so you can take over the remaining $275,000 loan at, let's just say it's at 3% interest rate, which is half as much, if not more than half of what you could.
But that can be a heavy lift, right? I mean, if you're, people have $225,000.
Unless you have independently wealthy or you sold
you hit the lottery.
Home.
Right, so it's not easy, but it's out there. And I came across one that was actually, the difference was only about $100,000 just recently in Gardnerville.
I talked to an agent this week that had one that was finally signing their paperwork. I've been checking on them because one of my homeowners owns a house nearby, and it's a rural area, so there was no comparable sales. So we identified this home as for sale for a really long time, and I talked to the agent. He told me that the buyer was assuming the loan. So I stayed in touch with him, and it's been almost 90 days that I've been chatting with him. He recognizes my number every time I call now, and it's proceeding.
Yeah, so, and then the other thing is, if you're a veteran, be careful, because why?
So if you're a veteran and you have qualified for a veteran's home loan, so
VA.
You served our country, so thank you.
Yep.
You have the best loan option that there is, in my opinion, is the veteran's home loan. If you sell your home and let somebody assume your loan, if they're another veteran, they can take their VA benefit and they can apply their VA benefits to that loan. You can choose to sell your home and let a buyer, non-VA, assume your loan, and you will not have your VA benefits for another VA home loan until that loan gets paid off.
Yes, be careful that you're a veteran. Make sure you're doing your due diligence, because you don't want to be stuck with someone else hanging on to your benefit until that mortgage is gone 20 years from now.
Now, if you sold your house and you have a few $100,000 down and you don't need the VA home loan right away, that could be a great way to get your home sold.
All right, so